Before, the S&P and NASDAQ notched another record high today, leading some on Wall Street to ask if we're starting to see signs of froth in the market. Our next guest says yes, but it's not the major averages telling him that. Let's bring in Jonathan Krinsky. He's the chief market technician at BTIG. Jonathan, good to see you. And what does tell you that things are getting a little extended here?
Hey, Kelly. So, yeah, I think on the top line indices, they are certainly getting stretched as far as duration without even a short-term pullback. For instance, the NASDAQ 100 is now working on its 60th consecutive trading day without closing below its 20-day moving average, which is a very short-term moving average. And believe it or not, that's the second longest streak in its history back to 1985. The only longer streak ended in early 1999. Now, the caveat there is that, prior streaks of this magnitude did not mark the final high. And so we don't think this is a major top, but we think, a short-term shakeout is likely probable as we head in towards August when seasonality actually turns a little more negative. Now, as far as your point to the frothy parts of the market, there are pockets, and specifically some of the meme stocks or the high social media content names.
Oh,
there's actually an index
stock. Yeah, I wasn't familiar with this. Tell us about it.
Yeah, so there's an ETF and an index, the ticker BUZZ. These are names with high social media engagement. Think names like Robinhood, Palantir, that sort of thing. So that index is now it's up 63% over the last 15 weeks. That's a bigger run than we saw at any point in the 2020-21 frenzy when we had zero interest rates. It's now about as stretched above its 200-day moving average, back to that 2021 period. So
wow.
Those sort of moves are typically unsustainable, and we think any further advance here likely is given back in short order.
Which might explain the flip side of this is that you're looking at utilities as one potential candidate for a breakout, which often be kind of a defensive market rotation. But is the other one the K-Web? I mean, that surprises me.
Yeah, so interesting. Both of these have certainly different characteristics. Utilities, a little more defensive, maybe less so than they used to be, given the AI tailwind to some of them. But both of these parts of the market have been essentially sideways since last fall, since last September, October. And that creates a nice entry point for us because you have this big, long base. And, if you get a pullback in some of the, higher froth areas of the market, perhaps you could see a rotation there. We're certainly seeing it today with utilities finally breaking out to a new high. The K-Web is a little more speculative, of course, but I think also we've seen periods of time when you've seen rotation from, say, U.S. tech into China tech, and we think that's, at least worth a look at this point.